Hi friends, welcome to Invest Right. In today's video, we are going to discuss and compare three different asset classes. Now, before we go into the main topic for the day, let's first understand what do we mean by assets and what are the different types of asset classes that are available for investments. So let's get started. So what do we mean by assets? In financial accounting, an asset is any resource owned or controlled by a business or an economic entity. It is anything that can be used to produce a positive economic value. Now, in simple terms, if you want to understand, uh, Mr. Robert Kiyosaki, the author of a book called Rich Dad Poor Dad, defines assets as anything which puts money in your pocket, whereas anything which takes out money from your pocket are liabilities. Now, many of you would be like, why I need to know all this? It is because every investor is different and their risk profile is different, and every asset class is suited for meeting certain kind of goals. So before we start investing, we need to know major things about ourselves: our risk appetite, our investment horizon, like how long we are ready to be invested, or when do we want that money, and lastly our goals as to why we started investing. It could be anything like child's higher education, foreign trip, child's marriage, retirement, etc., etc., and that's totally personal. Now let's understand the different categories under which the financial assets are categorized. Now, these are primarily categorized under six heads. These are cash or cash equivalent. In simple terms, these are the cash that is readily available for you for usage. For example, the money in your bank, which can be withdrawn anytime using an ATM, is a simple example of a cash or a cash equivalent. Now, these are best suited for meeting short-term needs or emergency needs, and it is a must to have in anybody's portfolio. Next, we have fixed income. This is the most popular and the oldest investment option among Indians. Here, as the name suggests, you are guaranteed some percentage of returns at the beginning of your investment. These are generally low risk type, and it includes government bonds, corporate debt securities, fixed deposit, etc. Next, we have real estate. This asset class focuses on apartments, plots, industrial areas, buildings, etc. Real estate is also one of the most popularly used investment tool by Indians. Okay. Next, we have the commodities. Now, these are the asset classes which includes ownership of goods that has an end use. For example, buying gold, silver, copper, crude oil, etc. comes as part of the commodity asset class. Next, we have equity. Equity asset class includes owning of shares of a company. Now, equity investing encompasses both direct investing in stocks or investing in stocks through mutual funds or through small cases. Now, we will discuss this thing in great detail subsequently. And lastly, we have cryptos or cryptocurrency, the newest asset class, my highly volatile and completely tech oriented asset class. We will discuss about this in great detail in subsequent videos, but for now, we'll keep that aside. Now, with these things in mind, let's get to the topic and discuss the pros and cons of three asset classes, starting with the fixed deposit. First, the pros. These are low risk and low return type investments. They can give us fixed returns, and the other advantage is that we can take up a loan against an FD, or we can keep them as collateral. And lastly, we have an option for flexible payout, so we can opt as per our requirement. Now let's look at the cons of an FD. These are low returns and are not sufficient to beat the inflation. We have a penalty on premature withdrawal or breaking of an FD, and these are not completely tax free, though we get some exemption under Section 80 TTB. But for individuals who come in high tax bracket, the post tax returns is very low. Now let's have a look at the real estate asset class. First, the pros. Real estate is a long term game and its value appreciate over time. It comes with some tax benefit, and that makes it lucrative. It can help us generate some steady cash flow in the form of rents. It acts as a great hedge against inflation, as when inflation goes up, so does the monthly rent, but EMI we pay to the bank remains same. So the potential rental yield increases, but the expenses remain same. Now the cons. It requires large sum of capital to start with. Also, since it's a short long-term play, can't expect any great returns in the short term. The process of handling real estate is not very transparent, and because of this, if not handled properly, it can be problematic and thus it has huge risk associated with it. Now, moving to the equity asset class. These always grow with the economy of a country. If economy grows, a good company will also grow with it, and so will the share price and thus benefiting the shareholder. Next, it can help beat the inflation in the long term. Note the long term. Next, it is very liquid asset, and as a result of buying and constant buying and selling, it is really easy and transparent. To start investing in stock market, the large capital is not required. We can start our investing journey with as low as 100 rupees. But this asset class has some cons too. These are, in the short term, it's very risky and volatile. That is, since it's liquid, there are constant fluctuation in the share price due to regular buying or selling. But in the long term, it can be a huge wealth generator. Now, if you see the last 6 months chart of Reliance Industries, we see that the stock price has oscillated between 2800 and 2300, which is a 500 rupees move. And even today, as on 6th Jan 2023, a person who would have bought the share price in June 22 would be sitting on a loss of roughly 300 rupees per share. But same Reliance, if you see in the long term, is on an uptrend continuously. Until date, it has generated a return of over 100x. Now, this is excluding the dividends which Reliance Industries has distributed. So that's why in the short term, it is risky and volatile, but in the long term, it can turn out to be a huge wealth generator. Now, because of this price fluctuation, it can be emotionally daunting to see your portfolio in loss or red sometimes. Next, the returns and or the gains are taxable beyond certain limit. And lastly, the research involved to select good companies takes time. Now let's consolidate and have a look at the comparison. Out of all the asset classes, equity is the one which has ability to beat inflation and generate great returns over a period of time, even if you have small sum of money to start with. Just that it requires little bit of learning and research to be done, and we will do it together. Okay friend, so that's it for today. Do share your thoughts about the video and let me know in the comment section what asset classes do you own. In the next video, we will discuss about some myth about the stock market investing. So hope you like the video guys. Please like, share and subscribe to the channel and see you in the next video.